I don't know whether today myself, mommy is here. Hello, so mommy, if you are here, can you pray for us? I've seen a name like you are here. That's right. I is 23. Cost. Okay, shall we pray? Heavenly Father, we thank you so much for a gracious opportunity like this. We pray that as we are about to learn,
Yeah.
you grant us the spirit of wisdom and understanding, the retentive memory, so that on that day we can be able to reproduce and pass our exam. And at the end, glory and adoration shall be given unto thy name. This and many more we ask in the name of the Father, and of the Son, and of the Holy Spirit. Amen. Amen.
Amen.
Amen.
All right. So
Amen.
let's see.
Amen.
We are looking at exercise 5, which is the same as IAS 23. Exercise 5, which is the same as IAS what? 23. Now, let's see. Exercise 5 has been aligned to be the same as IAS 23, applying the same principle. The only difference is that under exercise 5, one has to choose between the benchmark and the allowed alternate, whether to capitalize borrowing costs or whether to expense every borrowing cost in the revenue and expenditure. That's for exercise. But for IAS 23, saying that once the the capitalization criteria is met, then you are required to what? To use the allowed alternative method. That is, you are required to capitalize what? Borrowing cost. Okay, let's see the topic. What are the key issues? What are the key issues? The principles are the same. What are the key issues? Key issues. Number one, we need to understand some key definitions. So key definitions, want to look at the meaning of borrowing cost itself. Then we'll look at the meaning of qualifying assets. Then we'll look at the meaning of capitalization rates. Now, after that, we'll come and then look at the methods for accounting for borrowing costs. That is the capitalization method, which is the allowed alternative. That is the capitalization method. Then we look at the benchmark treatment. where all borrowing costs is expensed in the profit or loss, that is in FR or corporate, and then revenue and expenditure, that is if you are dealing with public sector account or statement of financial performance. Then we look at borrowing costs eligible for capitalization. So now everything we are going to do is on the capitalization, because everybody knows how to expense interest in the P&L or in the statement of financial performance. So we look at borrowing costs eligible for capitalization. So here we take our time and then look at when to what? When to capitalize, or when does capitalization even what apply? When does capitalization apply? We look at some exclusions. Then we look at eligibility. So we'll now be interested in how we end the borrowing cost. That is when to commence capitalization, when to suspend capitalization, it's a suspension, and then cessation. I may even skip and look at this before I look at the borrowing cost eligible for capitalization, so that under the eligibility we understand. Then we end with a disclosure. When it comes to your exam questions, we look at 3 issues. You need to understand how to deal with specific borrowing, and then how to do with existing borrowing. Then you need to understand the principles when you are using both existing and what and specific to finance a project. That will bring us to the end of the session. If you look at the document that I sent to you, I've given you 13 questions, meaning that after today and tomorrow, I am very hopeful, and then I'm trusting God that I'll be able to clear those questions so that borrowing costs will be a thing of the past to you. So we'll try and see if it's 4 questions that we can do today, in addition to the understanding or the explanation, we do that. Then tomorrow we'll come and so in fact tomorrow, even though I've given you some time there, we are going to solve all the questions there before we close. We need to make some sacrifice. Friends, are you there? Hello, are you there?
Yes, we are.
Yes, sir.
So we have 13 questions there. We must go through. We must go through all of them. Yeah. All right. So let's set the ball rolling by looking at each of the issues. Okay. Let's start with the key definitions. We are taking everything from scratch as if we don't know anything. So Key definitions.
It's just like we want to do this one with us. Some of this thing that is doing.
So borrowing costs, we are referring to all costs. All costs
Karaba, you know who concern.
associated with borrowing. All costs associated with what? Borrowing. It comprises of two elements. So in other words, when we say borrowing costs is just the interest cost you are incurring on the loan plus other costs. Other costs may include processing fees, insurance, premiums. Others will charge commitment fees, those fees that they have been charging. Any other cost that you incur in getting a loan, apart from the interest cost, is part of the borrowing what cost. Hello? Hello?
Hi.
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 Okay.
Hi.
So, I want to move further. If there is no other cost, then this interest cost can be determined using the nominal interest rate. Hello? This interest cost is computed using the nominal interest rate. But whenever there is other costs, then it will result in an effective interest rate. Other costs will give rise to effective interest rate, which is higher than the interest cost, or which is higher than the nominal interest, which is higher than the nominal interest. Because we are saying that the nominal interest rate is used to calculate the interest cost. Is that not it? Is that not it?
Yes, please.
So if we are saying that the cost of borrowing is not only the interest cost, but it also comprises of the other costs, then it will give rise to an effective interest rate, which is more than a nominal interest rate. It means that this effective interest rate, if you use in calculating the borrowing cost, it will give you the total of the interest cost plus the other costs. But if you use the nominal rate, the cost that you get is only the interest cost. Did you get it?
Yes, sir.
So it means that we've talked about two rates here: nominal interest rate and effective what? Interest rate. Did you get it?
Yes, sir.
So
Yes, sir.
interest rate So we have the nominal interest rates. I said this is used in calculating what? The interest cost or the nominal interest cost only. Write like this. It is used in calculating the nominal interest cost only. Then the effective interest. The effective interest rate. For now, we won't look at the calculation of that. Along the line, when we have understood everything, then we'll now look at how to compute the effective interest rate. That is, if let's say there's other cost in the question does not give us the effective interest rate. So the effective interest rate here, it is used in calculating the borrowing cost where there is other cost. Where there is other cost. So in that case, the result is that the effective interest rate will give the interest cost plus the other cost. So this all the explanation I've been given. You should be careful because under specific borrowing, they will be making good use of these rates. Okay. Now let's look at the capitalization rate. That's what I've looked at. So capitalization rate, we need to know whether you are, if it's specific, then you need to know whether you are using the nominal or the effective, or you are using the WACC. That one get they will explain. At least I've explained something about the rate. Let's look at the last thing. That is a qualifying asset.
Hello, boss.
Yes.
I said the effective interest rate is equal to the interest cost plus the other cost.
Yes.
So the
What I
interest
mean is
rate.
that if you use the effective interest rate to compute the borrowing cost on the loan that you have taken, whatever you get will be the interest cost plus the other cost. This one is a rate. It's a rate that you are using to compute the amount of borrowing cost. Please do get it.
Okay, sir. I get it.
If you use the nominal interest rate, then what you will get is only the interest cost.
Yes,
But
okay.
if you use effective interest rate, then you get other cost. In other words, I'm saying that where there is no other cost, then the effective interest rate is equal to the nominal interest rate. The nominal interest rate.
Okay, that's fine.
Okay. So qualifying assets. Qualifying assets. A qualifying asset is an asset that takes a substantial period of time for it what consumption or for it to be made ready for its intended what use.
Yeah. Let's come again, sir.
A qualifying asset. This is an asset that takes substantial period substantial period for its construction or for it to be made ready for use. So, what is the meaning of substantial period? Substantial period here means period within which borrowing costs can be incurred. Substantial period means period within which borrowing costs can be incurred. Can be what? Incurred. So I think at this point I can even touch on the exclusions. Now, exclusions. Let me go to the next page. Exclusions. The following are not qualifying assets. The following are not qualifying assets. And the underlying issue here is that we are looking at an asset that takes a substantial period of time for its construction or for it to be made what? For it to be made ready for what? For use. Okay. So exclusions. Under qualifying assets. The following are not qualifying what? Assets. The following are not qualifying assets. Number one.
Yeah.
Naturally completed assets. Naturally completed what? Completed assets. Yes, we are not saying that land is not a qualifying asset, but we are saying that it is not a qualifying asset that will require capitalization of borrowing costs. Hello. Let me add that one to the explanation. Now,
Hello, Olivia.
so the following are not qualifying assets that will
I'll
require.
send it to Ecobank. Jason.
So you can't talk to somebody without meeting your mic. The following are not qualifying assets that require borrowing cost capitalization. When we say borrowing cost capitalization, we mean you adding the borrowing cost to the cost of what? The asset. Naturally completed. Okay, let me make it like this. Already completed. Already completed assets. Then under that, I can say that land is naturally completed. True or false? Can you say that you are going to construct land?
No, sir.
Yeah, you can be leveling the land, shaping the land, doing whatever, but even in the sea, the water is on the land. Is that not it? That land is only God that created it. Friends, not so. So land is naturally completed. When we say borrowing cost capitalization, we capitalize only during period of construction. Only the period within which the construction is taking place. That is when we capitalize borrowing cost. So if the thing is naturally completed, you can't capitalize borrowing costs on it. You get it? Did you get it?
Sir. Yes, sir.
So if you take a loan to put up, let's say, a building project, we'll capitalize the borrowing costs on the remaining assets, excluding the land, because land is naturally what? Completed. Okay. Land is, I wrote naturally land. Land is naturally what? Completed.
Yes. Oh, sir, the explanation you gave right now, I didn't get it all.
I said that when it comes to adding borrowing cost to the cost of the asset, that is when we say borrowing cost is being capitalized, it means that
Yeah.
we are adding the borrowing cost to the cost of the asset.
Very
We
well.
can only do that during the period that the asset is being constructed. So if you know the period that God was creating the land, then if God took a loan to construct the land, they would have capitalized borrowing costs on the land during the period when the land was constructed. But we are saying that no, we are human beings. The land is naturally completed. You are no more going to construct the land. So there wouldn't be any construction period for you to capitalize borrowing costs. Therefore, we don't capitalize borrowing costs on land because it is naturally completed. Are we making some sense?
It's okay. Thank you.
Okay. Then number 2, already completed man-made assets. For example, a completed motor vehicle. So if you take a loan to go and buy motor vehicle from Toyota Ghana, you can't capitalize borrowing costs on it. The interest cost cannot be added to the cost of the car. Are you making some sense? Please, are you making some sense?
Yes, sir.
However, if
Yes, sir.
the organization requests from the Toyota Limited, in fact, the manufacturers, to manufacture a particular type of car for the organization, then during the period of the manufacturing, assuming it will take 2 years for them to finish the manufacturing of that car, then during the 2 years, any borrowing cost incurred on the loan taken to acquire that car must be capitalized, must be added to the cost of the car. Are you making some sense? Are you making some sense?
Yes, sir.
Yes, please.
I don't know. Let me say it in an account, maybe. Mama Pedama Kaindewa say, Koto Kala, why you read the one? You don't have to capitalize borrowing cost on it because it's already completed. As a car now, fee now, any specification record there 1 year more. Then during the period of manufacturing, you can capitalize borrowing costs. So that one is within the qualifying asset criteria. If the car is completed and you are going to buy, then you can't capitalize borrowing cost on it because it has been completed, has been tested or everything. Is that clear? Okay.
Yes, sir.
Then number 2,
That's it.
inventories that are produced in a repetitive manner. I'll explain that. Inventories produced in a repetitive manner. When we say inventory produced in a repetitive manner, we mean inventory that does not take a substantial period of time for its production. Like in a day, you can produce like 10 or 20 or 5 or 100. You understand? In a day, you can produce like 100 units, 200 units, 50 units, 10 units, 2 units, 3 units. We say that it is in a repetitive manner. The period that you would take to produce one inventory is not substantial to incur borrowing costs. Assuming it takes 10 minutes to produce one product, and you go to the bank and say that bank, I need loan for 10 minutes. I'll pay you in 10 minutes time. Does it work like that? Friend, does it work like that?
Quick
No.
loan.
No, sir.
I say quick loan. So please, we are saying that the period that is required to produce a repetitive inventory is not substantial enough to incur borrowing costs. So it is excluded from borrowing cost capitalization. So if you do IAS 2 or IPSAS 12, to tell you that borrowing cost should be excluded from the cost of inventory unless it meets the IAS 23 or IPSAS 5 criteria. And the criteria is that the inventory must be a qualifying asset. If you are into real estate, then building is your inventory, true or false? Hello, in a real estate company, building is an inventory, true or false?
True.
True. So in that case, because it takes a substantial period of time to construct a building, we say that building, even though it's an inventory, will qualify as a qualifying asset, and we must capitalize borrowing costs on it during the period of construction. The one that is excluded, we are referring to inventories that are produced in a repetitive manner. Repetitive manner means that we produce the inventory so fast that the period that is using completing one inventory, we cannot incur borrowing costs within that period. 1 minute, 2 minutes, 1 day, you understand? Is that clear? Please, is that clear?
Yes, sir.
Yes, please.
So now that we know qualifying assets, up to this point, with the definition that we have, that will lead us to solving our first question on the document. The first question.
Please, sir.
Yes.
Please, kindly come over on the building aspect. If you are into the building construction, and you made mention
I said that building is a qualifying asset. So if you are into real estate, even though building is an inventory, building is not produced in a repetitive manner. So you are going to capitalize borrowing costs on the building, even though it is an inventory, you capitalize it because it is not produced in a repetitive manner. Is that clear? Please, is that clear?
Yes, sir.
Okay.
Thank you.
So permission, the ladies, please give me permission to insert something. I want to insert the first question. I think there's no need to insert. Let's go and then look at the question.
So what did you say? Did you say insert?
I want to open.
What did you also hear?
Very bad. Very bad.
And why only ladies?
Are you? Mother, you have joined it. I feel more cry.
But I hire home.
Hey, Mr. Osman, Akaba.
Well, let's see now.
Oh, I see. So even last Wednesday you joined it.
Yes, please.
Okay, so let's see. So let's see the first question. I know the questions didn't come early, but I don't know if maybe by tomorrow you can print. You know, if you print, usually it helps you to follow. Let's see the first question. This one, I'm not going to talk. You are the one going to solve. When we read, then one of you raise the hand and solve. Required. Identify whether or not the following is a qualifying asset. Number 1. A construction company constructing a bridge for government, which will take 6 years to complete.
Say it's a
Please, who
qualifying
will
asset.
answer?
It's a qualifying asset.
It's a qualifying asset. Why?
Raise your hand.
It takes a substantial period for it to be constructed.
Because the period that is taken to construct the bridge is substantial enough to incur borrowing costs. So please, I think you have to raise your hand so that I think we can flow. Number 2 or the B. A very sophisticated integrated circuit being made by an entity who manufactures and sells 10,000 to 12,000 units every month. A sophisticated integrated circuit being made by an entity who manufactures and sells 10,000 to 12,000 units every month. Famous Awuku.
Such a product is not a qualifying asset.
Why?
Because it is part of their activity that they produce on a regular basis. So it cannot be capitalized.
Okay, can somebody add another explanation? There's an explanation that I want. Raymond.
Sir, please, the number of units that is produced within a month it's so many that it makes it very repetitive.
So what you need to do is to pick either the 10,000 or the 12,000 and divide by 30. Pick 12,000 and divide by 30. What do you get? The 400.
400.
It means that 400 units is produced per day, which means that it is repetitive. So that's what you use. You say that given that a maximum of 12,000 units is produced per month, it translates to 400 units per day, which means that the inventory is produced in a repetitive manner. And for that matter, borrowing costs and for that matter, it cannot qualify as a qualifying asset. Please, I'm not writing these things. We just want to understand based on what we have learned this evening. Are we getting it?
Yes, sir.
I don't think this is something I should insert and be writing. I hope that's okay.
That's okay, sir.
All right. Let's look at number C. A power plant under construction. It may take 10 months to complete this. Honorable Raymond, why do we have the same people talking? The rest is like you don't understand.
So it's a qualifying asset.
I will be doing some name calling very soon. Okay, so it's a qualifying asset because the power plant is taking substantial period for its production or for its construction. Number 4.
Sir, please add a contribution.
Oh, please make your contributions.
Yeah, so I thought for it to, with a substantial period of time, it's from 1 year onwards. But
No. I said period within which borrowing cost can be capitalized. So ideally, we are looking at 1 month and over.
So once it exceeds a month, it can be qualified.
Once it's 1 month going.
Oh, okay. All right.
We are looking at period within which you can go to bank and take a loan. I getting it.
Okay.
I don't know if you can go to your bank and tell them to give you a loan of 5 billion. You pay in 15 days time. It's not in the normal arrangement of a bank to give a loan for 15 days. Is that not it?
Yeah.
But at least 1 month there, you can get a loan that's arranged for 1 month, 2 months, 3 months, and that.
Oh, okay. All right.
All right.
Thank you.
Number 4. An equipment purchased by X Limited. The equipment may be used immediately after it is delivered. You've purchased an equipment. And
it's a qualifying asset.
Why?
I think it's not
because it's an already completed man-made asset.
Yes, so because it is ready for use, you can say that. Because it's ready for use. Once an asset is ready for use, you cannot capitalize borrowing costs on it. Did you get it? Once it is completed, you can't capitalize borrowing costs on it. So it's easy to be a qualifying asset. We are not saying that it is not a qualifying asset, but it is not a qualifying asset that requires capitalization. We know that when we talk of the equipment, it may take substantial period of time for its construction. But we are excluding it as a qualifying asset because it is completed. If they are now manufacturing it, then we look at the time they will spend in the manufacturing. Then we say that it is a qualifying asset. Did you get it? Hey,
Yes,
more
sir.
one now say money.
Yes, sir.
Yeah,
Yes, sir.
Number 5. Special order. Special order. Raymond, your hand is up. Question.
No, sir.
Okay. So number 5. So special order from a customer to manufacture a machine for him, which will take 11 months at least. You have a special order from a customer to manufacture a machine that will take 11 months. Can borrowing costs be capitalized?
Yes, please.
Kojo should answer. I've seen some hand.
Okay. Yeah,
Yes, sir.
that's me. You have to capitalize
It's a qualifying
because
asset,
it's
right? Why?
yes, because it's a special request or request from a supplier.
It is not because it's a special request from a customer. It is because even though it's a special request, it will take substantial period of
10
time
months to manufacture it. Yes.
for it to be made ready. Frank, you get it? Assuming they said it will take 8 days for it to be manufactured, would have said that it's not a qualifying asset because the time period is not enough to incur borrowing costs. Is that clear? Okay. Number 6. An entity is
Hello, Sir
constructed.
Robert.
Yes, a question?
Yes, sir.
Okay.
So, with the E, the special order thing, I was looking at the asset is not for the company, it's rather for a customer. So then we are contracting the loan, or if you are assuming we are contracting loan, we are contracting it to do it for a customer, but not for the company. How?
So it means that
And
it's
do
your
we?
inventory. It means it's your inventory, just like you are a real estate company. And a customer say that I need this specification for a building. Can you build it for me? Then after that, I will pay you. Then you said, okay, yes. So you said the building will take 11 months. Then you take a loan to construct that building. We are saying that within that 11 months, because the time period is substantial, within that 11 months, you need to capitalize the borrowing cost incurred as part of the cost of the building. That's what we are saying.
Okay, sir. Thank you.
Yeah, okay. Okay, so let's look at number 6. An entity is constructing office building, which will take 8 months to complete.
The qualifying assets.
It's a qualifying asset. This one is very, very simple. Okay. Now, NY, your hand is up. NY.
Hello, sir. Good evening.
Good evening, sir.
So, sir, please, I would like to cite a real life example and help me out.
Oh, it
if
means
it's-
that what you have read there is not real life.
Oh, no. I said I want to.
Okay. Calm down. Don't worry. That's just.
Uh-huh. So, sir, please, let's say a Canadian agency, like an agency in Canada, they want to purchase a jet fighter costing so much, let's say in the millions, but they would like to take a loan to, go about it from US, United States of America. And then let's say we are assuming the purchase price is $5 million. And then they did the purchase. I mean, they went to the bank, signed all the documents, and then the aircraft or the jet fighter was transferred to them. However, for it to be made, it's completed. The jet fighter is completed, but for it to be made ready for use, the American government is saying that, oh, okay, we would have to you have to give us, let's say, 8 months, so that we will give you what they call the password codes to, operationalize the jet fighter. So in this case, the jet fighter is ready. They've constructed it, but just that they just need that passcode to enter into the computer systems for them to use it. But it will be handed over to them within 8 months period. So in that particular scenario, will it still be, will capitalization still continue?
No. Substantially, it is ready for use. You getting that password does not add anything to the aircraft. Is that not it? It does not add any value. It's just like you putting up a building without painting. Then it's taking a long time. We know that painting should not take substantial period of time. So if maybe there's a delay in getting the painters and it takes you 6 months to do the painting, we will say that the building is substantially completed. That period you have wasted in painting, we will not wait, we will not capitalize during that period, but substantially it is completed.
Okay. All right.
Sir Robert, I have a question on that one.
Sir Robert.
Okay, let me check and then call you. So the one who just spoke is okay. So now the hand I'm seeing is Rejoice. Please, Madam Rejoice, you can ask your question. Or if it's a gentleman too. Rejoice, you are the one who just spoke.
No, sir. This is NY. Thank you.
Okay.
Sir Robert.
No, I'm saying I raise your hand. Others have raised their hand, so let me attend to that. So Rejoice, are you ready to talk? Okay, if Rejoice is not ready, let's go to CAF.
Yes, sir. So just the example that our brother just cited. You see, so when the aircraft is constructed and then they are waiting for the password, without the password, it can never be operated. Is it not consequential enough to be considered as the jet is not ready for use and can also be imputed in the cost?
And so the term, in that case, then the term ready for use cannot be used. We are saying that, is this substantially ready? Sometimes getting these passwords is not like it is built, it is inbuilt. So they've done it. So they are only waiting to ascertain the password for you. It's not like they are now going to work on how to install the password and those kind of things. If they are now going to install the password and those things, then it's not ready for use. But if it has been built, installed, everything, so it's just a matter of waiting for 8 months to generate the password for you. It is ready for use substantially. You just like put it like the example I give, you just like putting up a building and then you are waiting for your painters to come and paint. It is substantially what completed. Did you get it? You see,
very well.
If I am the accountant, I will look at it from the substance over the form.
Okay.
I will be looking at it from this point of view that, okay, is the password part of the consortium? And maybe after it is completed, they are supposed to find a way of installing the password as part of the construction of the aircraft. Or as part of the aircraft, you use I'm the manufacturer of the aircraft. If it's part, then going core capitalization should continue. So it will be within. But if it is inbuilt and just a matter of generating the password for you, that cannot be part. So for example, I've taken a loan to build a one-touch website. the website is ready. I've seen that everything is ready. The IT guy has to just get me some password to be able to access the administrator's aspect of the password of the website. When call capitalization should cease because it is the website is ready. It is just somebody's work to make sure that you get the password for you. Getting the password does not add any value to the website. That's what we are saying. But if it's now going to install or produce that kind of password as part of the aircraft, then it should be capitalized. So you need to look at the substance. Well, if you are saying that you cannot say the aircraft is completed, so once you use the argument that it is completed, though, but they are waiting to receive just the password, then substantially you have to cease capitalization. But if you say that, oh, it's not completed, they are now trying to install the passwords, then the period that they will take to install the password is part of the manufacturing process of the aircraft. Did you get it? So maybe the way you posted, I mean, he asked the question to, if the question was asked in another way, maybe you would have gotten a different answer. Rejoice, your hand is back. Your hand is up again.
It's an old hand.
An old hand. I'll put in it that way, you rephrase it again. Okay, let's go to David Delal.
Okay, sir, please. I want to ask a question about a qualifying asset. So, in a case where maybe we are building like a story building, and then we finished maybe the ground floor, and we are already using it, but then the top floor we've not finished it. It's still in construction. In this case,
So we'll come to that. We'll come to that. We'll come to when to cease. And then I will tell you that where the asset is constructed or is completed in parts, and the part completed can be used whilst work continues on the part yet to be completed. Then capitalization should cease on the part completed whilst it continues on the part yet to be completed.
Okay.
Yeah, so when I get to cessation, I'll talk about it.
Okay.
Okay. Let's go to Enoch Amponsa. Name.
Yes, sir. Hello. Good evening, sir.
Good evening, sir.
So I wanted to get I wanted to make this thing clear. So the main attention that we should give here is about the production process and the manufacturing process. It needs to be complete. That is when you make that qualification.
Yes. But what I'm trying to say that certain processes does not take substantial period. So if it's left with those processes, you have to cease capitalization. For example, you are putting up a building, you are done with the building, everything. It's done with only painting. You understand? Painting, even if you have let's say painting should not take substantial period of time. Unless the asset is so sophisticated that the painting will take substantial period of time for it to be completed. Then we say that okay, we need to wait for the painting to be completed before we cease capitalization. Otherwise, if there's any delay on the painting, the asset is substantially completed.
All right, thank you very much.
Rejoice, check your Zoom. Every minute you raise your hand. Okay, so now you want to ask a question.
Say, it's me, Robert. I don't know how I'm appearing as Rejoice. I don't know. But this is Robert.
Okay.
I want to find out with the aircraft example that I rather give. In a situation whereby the aircraft have been delivered and they are waiting or they are in a process of training the pilots to be able to fly the jet, can we capitalize the borrowing cost?
No,
it is more related to IAS.
No, it's completed. So the period, the training period, any borrowing cost incurred during the training period should be expensed in the statement of financial performance in terms of public sector. And then you take it to profit or loss in terms of corporate reporting or financial reporting.
Okay, so what if is the question we are looking at is under IAS system? Can it be added to the cost of the assets?
No, We are still talking of IAS 16 issues here. That capitalization here means add to the cost of the asset. So this is what I'm saying, you can't add to the cost of the asset.
Okay.
You can't add.
Thank you.
Whatever asset it is, you can't add. It must be expense. When it's completed, we don't care when you start using the asset. Once it is completed, then you need to cease capitalization.
Okay, thank you, sir.
Okay, so now I can move back to the board, right? FI and CR, I'm very optimistic that this time, Charlie, borrowing costs, the March, they went and gave the borrowing costs to the public sector students. But no, yeah, we still did. Vim still did. Okay, now let's look at the allowed alternative and the benchmark. It's so simple. The allowed alternative is saying that capitalize borrowing cost. It means that add borrowing cost to the cost of the asset during the construction period. Then benchmark treatment is saying that the borrowing cost should be treated as well as an expense. So let me just talk about it. The methods. The methods. Okay, so benchmark treatment is saying that all borrowing costs must be expensed. So in terms of IPSAS 5, it means that it must be expensed in the statement of financial performance, or the income and expenditure, or the revenue and expenditure. Then in terms of IAS 23, that's the FI and the CR. When we say it should be expense, we mean that it should be expense in the P&L account. Did you get it? It should be expense in the profit or loss account. Did you get it?
Yes, sir.
The underlying
Yes, sir.
issue is
Yes, sir.
all. Then the allowed alternative. Allowed alternative. Here, borrowing costs incurred on qualifying assets during the construction period. This is very important. During the what? Construction period is capitalized. Capitalized here means it's added to the cost of the assets. It's added to the cost of the asset. Any borrowing cost outside the criteria is expense. Any borrowing cost outside the criteria is expense. Daniel Kaku.
Yes, sir. Please, my question is, what, as a company, what do you benefit for capitalizing the borrowing cost instead of just expensing it in the period in which it was incurred? Why do we have to worry ourselves with capitalizing it? What benefit does it bring to the company?
Okay, so the capitalization, what it does is that, it increases the value of the asset. And you see, what it does is that you happen to have deferred tax issues. We are saying that the question should not be the benefit to the entity. But we are talking of an accounting arrangement. We are looking at the cost of a project. So the cost of a project is all the cost that is directly linked to the project. Is that not it? So the question should not be what is the benefit of adding land to the cost of land and building? You understand? The question should be the recognition issues. We are saying that it is part of the cost you have incurred directly on the project. So it must be part of the cost of the asset. Because you are going to get benefit from the asset over a period. So whatever cost that you are incurring on the asset should be capitalized and spread over the period that you get the benefit from the asset. Did you get it? Hello?
Very clear.
It should not be about
Yes,
the importance. That one, it cannot be answered. It will be a rhetorical question. Okay, now, let's see. So I'm saying that under IAS 23, once the criteria for capitalization is met, you need to capitalize borrowing cost. But under IFSAS, it's a matter of choice. The entity, the government have to choose between going for the capitalization method or that allowed alternative method, or going for the benchmark or treatment. So the government of Ghana has adopted the capitalization method. Please do get it. Because that is, it is recommended that you use the capitalization method when the criteria is met. It's not compulsory. But on IAS 23, when the criteria is met, you need to what? Capitalize borrowing costs. Exactly. But like I said, no one will ask you that the principle is the same. The principle for calculating the borrowing cost to capitalize is the same. Okay. So now, we want to look at when to commence capitalization. We now want to concentrate on capitalization itself. When do we start capitalizing the borrowing cost to an asset? When do we suspend capitalization? And when do we cease capitalization? And after that, I'll come and look at the borrowing cost eligible for capitalization, where we look at the specific and the existing borrowing. So once I do this before that, I think you understand. Before we start solving our questions. Hey, more one answer. Okay, so commencement. Hey, my people from Liberia, are you here? Do we have any student from Liberia? None of them is able to join them. Okay.
There is one person.
One here.
Okay.
There's one here.
There's one. Oh, okay. Okay. Tell your other colleagues that we have started. Okay, now let's see. Commencement. Commencement. FR students should take note. For CR as well. They like asking you. PhD students know they can always ask you. Commencement. When should borrowing cost capitalization start? When should borrowing cost capitalization start? We have agreed that the asset is a qualifying asset and we must capitalize borrowing cost on it. Now, when should we start the capitalization? Capitalization commences only when the following three conditions are met. These three conditions must be met concurrently, meaning at the same time. you have met 2 and 1 is yet to be met, you cannot commence. The following 3 conditions must be met concurrently. And the line word is concurrently, at the same time, concurrently. Before capitalization can commence. Before capitalization can commence, or before capitalization commences. 1.
The
Borrowing
following
costs
conditions must be met.
The following 3 conditions must be met. Borrowing costs must be incurred. When do we start incurring borrowing costs? It means that the borrowing must be available. If it's a loan, you would have contracted the loan. It's only when we've taken the loan, then we start incurring borrowing costs. Is that not it? If it's an existing pool of funds, then we only start incurring the borrowing costs when an amount is withdrawn. Please, do you get it? Please, do you get it? I'm saying that we have specific borrowing. Specific borrowing means that a loan that has been taken specifically to finance the project. Did you get it?
Yes, sir.
So we say that borrowing cost is incurred as soon as the loan is available. Is that not it?
Yes, sir.
And then we have what we call the enterprise pool of debt. The entity has an existing loan that is for the operations of the entity. If you want to finance the project from such loan, then we are saying that you rather incur the borrowing costs as soon as you withdraw an amount for the purpose of the project. It is at that point we say that borrowing cost has been incurred. You have started incurring borrowing costs. Is that clear?
Yes, sir.
Is that clear?
Yes,
Number 2,
Yes, sir.
expenditure must be incurred. Expenditure must be what? Must be incurred. There's a difference between incurring an expenditure and paying for an expenditure. True or false?
True, sir.
True or false?
True, sir.
Yes.
True.
So if you obtain a land permit and you are yet to pay, you have incurred an expenditure. Tell that you have not paid. So expenditure must be what? Incurred. Cost must be incurred on the project. And the third one says that necessary activities should be ongoing to make the asset ready for its intended what? Use or sale. Necessary activities. Necessary activities must be taking place. Must be taking place to make the assets ready for use or sale. Necessary activities must be what? Must be taking place. So we are talking of substantial activity. Substantial activity. If I see that the only thing you have done is, before they dig the foundation, they have what they call profile. Those who know a bit about construction, we know we are not engineering students. They have what they call profile.
Profile.
Yes, they use wood and those things, and they'll rope. If that's the only thing that you have done, yes, it's a necessary activity, but it is not a substantial activity. So maybe you started digging the foundation, you started the footings and those things. Okay, so necessary activity, that is activities that everybody will see that once everybody sees, you say that the project have started. That's what we mean by necessary activity should be taking place to make the asset ready for its intended use. Might be taking place to make the asset. So these three criteria must be met at the same time. So if you have started incurring necessary activities, you've started incurring some costs. If you have started putting in place necessary activities, you have incurred some expenditure, and the loan amount is not available, you can't commence capitalization. Is that clear?
Yes, sir.
The loan must be available. Okay. So at that date that all the three conditions will be met, that is when you capitalize, you commence the capitalization. Hello.
Hello.
Hi.
Please come again with the last
Capitalization
one, sir.
commences. Capitalization commences on the date all the three criteria, on the date all the three criteria is met, or let's say all the three criteria are met. Okay, so that's just by the way. Now, let's look at suspension. Sometimes we need to suspend capitalization. During that period of suspension, borrowing costs incurred is expensed. It's expensed. A minute, someone is calling me, please. I don't know, so let me read for the person if it is the point. Sina, today your screen is off. No. So I've reset the screen for you. So check if it has come. Okay, so let's see. Suspension. Suspension. When do we suspend? Suspension of capitalization. Suspension of capitalization. Borrowing cost of capitalization is suspended when the project is brought to a halt as a result of what? Of issues that are not part of the construction process. So, borrowing cost capitalization is suspended when the project is put to a halt temporarily and the cost is not part of the construction process. During the suspension period, all borrowing costs incurred must be expensed. All borrowing costs incurred must be what? Must be expensed. must be expense. A more one some new.
Say
Please kindly go over.
Now, this one there's no need to go over. You just what you need is examples. That's all. So let's see. If the project is brought to a halt, if you stop the work as part of the construction process, then borrowing cost capitalization should continue. But if stopping the work is not part of the construction process, then borrowing cost capitalization should be suspended temporarily. Please do you get it?
Yes, sir.
Hello?
Yes, sir.
Let's come again.
Please, example.
Come again or what again?
Please kindly repeat it.
Repeat it, yes,
Message. Say, you know no. So now say it's part of the process of construction for you to stop. Then capitalization should continue. But if stopping the work is not part of the construction process, then capitalization should be suspended. So let me give you some examples. Example, capitalization should be suspended when the project is stopped or is put to a halt as a result of strike. The strike part of the construction process, like your workers go on strike and they will not work. Is it part?
Oh.
Litigation process as a result of litigation. Yes, Ina, madam, please come in. Is it part of the construction process that a court will ask you to stop?
No.
Okay. It's not part. So you understand now?
Yeah.
Yes, sir.
Friends, do you understand now?
Yes.
Yes,
Okay.
please.
So another example is that
is part of.
Is that what?
In some parts of Ghana, litigation is part. Kaswa.
No, we are talking of the normal construction process. We are not talking of construction process as per locality. No, we are looking at the normal process for that particular project. Is it part of the process that there should be there? Once you buy a land and you are building, there should be a litigation on it, and that you have to stop the work. No, so we are saying that yes, there could be litigation, but during that period of the litigation, where court are giving you an injunction to stop the work, during that period, you cannot capitalize borrowing costs. The borrowing costs in cash should be expensed. Did you get it?
Yeah.
Capitalization should continue if the cost of the halting is to carry a technical administrative work, to carry out technical administrative work, or if the halting is part of the construction process. It's part of the construction process. It's part of the construction process. Like for instance, no matter the amount of money Ibrahim Mahama has, he cannot say that you want to put up 6-bedroom house and that he are going to bring 20 masons, 100 laborers. They to put up the 6-bedroom house in 1 week. It doesn't work like that, right?
Yes.
When they
Yes,
lay
sir.
the blocks, they expect some time for it to dry, sometime before they continue. True or false?
True.
True.
Even the concrete.
When they put the iron rods there, maybe there's a flow, it will take some time. The next have to come and check the iron rods that they put in there, whether it's the right iron rods and all those things. All those technical administrative work is part of the construction process. You see, construction processes, they evolve over time. They change over time. And for example, previously, the machines that were used in constructing bridges during the rainy season, they had to stop work. So in that case, stopping work during the rainy season is part of the construction process. So capitalization should continue. But we are told that now we have sophisticated machines that can be used even during the rainy season because others believe that the best time to construct the bridge is even during the rainy season so that you know how the rain behaves during the rainy season. Please, do you get it? So now that we have machines that it can work during the rainy season, then you cannot pause the construction of the bridge as part of the construction process. I don't know if you are getting me.
Yes, sir.
I'm saying that construction processes, it changes over time. So when there's a new technology, the process will change. Okay, at a point we need to pause to do this. Or at a point that maybe you were not pausing. I mean, you were pausing. A new technology may stop the pause. You may not pause. You still continue with the work. Did you get it? Okay.
Yes, sir.
So that is for suspension. So they will tell you that the project was brought to a halt during a 2-month period or 1-month period because of this. Check the reason. Is the reason part of the construction process? If yes, then continue capitalization. Don't suspend. But if the reason is not part, then what? Suspend capitalization. Are you making some sense?
Yes, sir.
Okay. Raymond, your hand is up.
Yes, sir. So, sir, please, I want to cite an example, and then you will see whether it's continuing or it's suspended. For instance, with regards to say Pokwase, the construction of the interchange, where a change of government ensued, and then there was a need for some changes from say 2-tier to 3rd tier. When that construction is suspended for for those technical modification, would it qualify for capitalization during that time, or it won't qualify?
So that will be it depends, because this one is more or less like you want to modify the assets. Is that not it? Hello.
Yes. There
It
is
is a time
modification.
period required to modify the assets. So that one we need to continue capitalization, where per the consortium is included that sometimes there are escalation clauses that modification is allowed. So where modification is allowed as part of the escalation clause in the contract, then it's part of the consortium process. When you have to pause the work for them to perhaps change the specification, add something or remove something, it's allowed. But where because they stop the work because they are not getting money to pay the contractors, they stop the work because they want to change the contractors and give the contract to their own political party people. Those ones, during that period you need to suspend capitalization. It's not part of the construction process. I hope you understand. Friends, are you fine?
Yes, sir, we are fine.
Yes.
Okay,
please, we are
let's
fine.
go to Daniel Apia Otu.
Thank you, sir. So my question is, what if it happens to be a natural disaster? Let's say a flood, the construction is being carried on, and there's a flood outbreak, or let's say fire outbreak. Well, how will you treat it?
Not be capitalized.
So we are asking the question. We are asking the technical question that is natural disaster part of the construction process?
No.
No or yes?
No.
No. No.
No.
It's no. You suspend.
You suspended.
It's yes.
Okay. So you suspend it. Is that not it?
Okay. Yeah.
But there's an issue. It depends on the project. You see that some projects, you need to go underground. And when you go underground, you can meet this ancient artifacts and things. You can meet things that you are supposed to blast. Sometimes you can go and meet a stone, okay? And you are supposed to blast and those things. Those ones, if anything happens, it's part of the construction process. Assuming you are drilling a borehole, you've taken a loan to drill a borehole. I getting it. And the borehole drilling is such a way that everything will take you, let's say, 2 months. And because you're going to meet a stone underground, it's taking you about 6 months to blast that stone. It's part of the construction process that when you are digging underground, you can meet anything. Please do get it. Hello.
Yes, sir.
Even though that is also a form of natural disaster, you are saying that it's part of the construction process because you digging underground, you were expecting that it's part of the process that you can meet anything naturally that would delay what the process. Did you get it?
Yes. Correct.
Let's go to Daniel Apia Otu. I think he has spoken. Okay. Let's go to G. Joseph. See, in questions, usually, if you are not supposed to suspend, sometimes some examiners are good in such a way that they'll make it in weeks, 2 weeks, 3 weeks. So you know that it's not supposed to be suspended. You continue. But if I'm the one setting the question, it will be in months so that I will check whether indeed you are supposed to suspend or you are not supposed to suspend. Please do get it. All right. The name I called, I think is not ready. Let's go to James. James Eisen.
Thank you, sir. Sir,
Exactly.
please, I want to ask a question on the litigation court order. What if the court asks you to stop, maybe through your negligence? Because I quite remember in taxation, some fines are there that they will not allow you to take it out if it's your negligence that allow that thing to happen. So I'm asking if
so that is the important reason why we are saying that you should suspend. You should not capitalize. You should treat everything as an expense during that period.
So can't we mute ourselves?
That's why we are saying that you should suspend. Well, the litigation is not part of the construction process. But if you are in the process of, let's say, before you build, you need to register. You need to register the land and all those things. It's only unfortunate that in terms of land, we don't capitalize borrowing costs on it because it's naturally completed. Otherwise, that process of registration would have said that it is part of the construction process. Please do get it. But if you're obtaining a building permit, it's part. Because without a permit, you cannot work. Is that not it? So the period it takes you to take a building permit is part of the construction process. So capitalization should continue.
Thank you.
That is provided all the three criteria is met. I'm provided you have met all the three criteria they are met, like in that particular date. Provided the criteria is met, or all the criteria are met. Okay. Now, can we move to cessation? When do we cease borrowing cost capitalization? Can we look at that? A minute, let me take my water. Today, to the number have started drop. Jesus was asking the disciples some time ago. I said, Anamonso, Mubekwana, Anamonso, Mubekwana.
Yeah, go right.
Any baby ako nchaya na yaka.
Sometimes I know more. Maybe I'm with data and answer.
True. I think we are all aware say class day 6, so only data, so on data and so on.
Hey, Charlie, only the bottom.
It's the ability to it's the ability to afford or not.
Now only is class class.
Somebody has on the video. Hey. Please, the person should off it immediately. I beg you. This class, everything we do, I will send a recording. I will send a recording. So if you like, just put your videos on and something should happen. Okay. So let's go to cessation. When to cease capitalization. Hey, clear tools. Mute yourself. Okay. Capitalization should cease as soon as the asset construction is completed and is ready for use. Hello?
Hi.
Capitalization ceases. Capitalization ceases as soon as the construction or the manufacturing is completed. That is, as soon as the asset is ready for use. As soon as the asset is ready for use or available for use. Take note, we do not care, you and I, we do not care, we do not care, we do not care when the asset is put to use. We do not care when the asset is what? Is put to use. Once construction is completed, we will cease capitalization. If you like, wait till 6 months, 8 months before using the asset to train your staff and those things. We don't care. Capitalization must cease once the asset is ready for use. Once the asset is capable of being used, then capitalization must cease. Is that clear? Is that clear?
Yes, sir.
Yes, sir.
Sir Robert, please, there's a lingering sound at the background. I don't know who's it's coming from.
Let me meet everyone. I'm not hearing that.
It's coming from 198,198,475.
Okay, 198,475. Yes, steady. Famous steady. Okay, now the next thing is that where the asset is completed in parts and the part completed can be ready for use whilst construction continues on the part yet to be completed. Then borrowing cost capitalization should cease on the part or completed whilst it continues on the part yet to be completed. Do you understand? You have gotten a contract to construct 3 different story buildings. So building 1, building 2, building 3. If building 1 is completed and can be used whilst work continues on the other buildings, then once it is completed, you cease capitalization. Let's say it is ground floor, first floor, second floor, third floor. We are asking, once the ground floor is completed, can it be used whilst work continues on the first, second, and third? If that is no, then borrowing cost cannot be ceased on the first floor. Did you get it? Did you get it?
Yes, sir.
Because it's a story building. What if after ground floor you are using and they are still laying the blocks at the top and then people get injured and those things? We are just talking of those activities that are necessary to use an asset conducive. I don't mean those church projects that when it's not completed, they will still be using it. You know church, you know the church. The church, they are always in uncompleted building. That's not what we are talking about. We are talking of an asset that is ready for what? Use. So where the asset is completed in parts, then borrowing cost should cease on the part completed. Whilst it continues on the part, whilst capitalization continues. Capitalization continues on the part yet to be completed. Continues on the part yet to be completed. Raymond, you can ask your question.
So please, so under that circumstance, is there going to be the apportionment of the accrued interest?
Yeah, so you are taking a loan of 100 million. You know that you are doing building 1, building 2, building 3. So you know building 1 is less than 40 million, building 2 is 30 million, building 3 is 30 million. So if building 1 is completed, then the borrowing cost on the on the 40 million should be taken to P&L. From that date, it is completed. Whilst you continue to capitalize on building 2 and 3. If building 2 is completed, you cease capitalization. Then any borrowing cost incurred is taken to profit or loss. Whilst you continue to capitalize on building 3. Did you get it? No, this one is happening because some projects are completed on phases. You saw the KJT market, right?
Yes, sir.
Hello, the KJT market. You said that the phase 1 was completed and it was being used. Whilst work commenced on the phase 2, is that not it?
Yes, sir.
So borrowing cost capitalization will cease on the phase 1, whilst it continues on the phase 2 in that order. But the underlying thing is that the part completed, can it be used whilst work continues on the other phases? If that is yes, then you have to cease capitalization on the part completed because it's ready for use. You cannot say that it is ready for use If it cannot be used whilst work continues on the other part, then you cannot say technically it is ready for use. No.
Hello, sir.
Yes, sir.
So, but practically, when they are in phases, the loan structure will be different. Is that not it?
When they are in phases.
Yes.
Like so if you have different loans, then we are talking of a different thing. We are talking of you taking a loan for a project that is in phases. The project may be such a way that you cannot put everything together. So you have to divide the project. I get it. You cannot say that you are building an ultra-modern market that will take about 200 acres of land at the same time. No, you can have a loan for that ultra-modern market, but you break the market into phases. Did you get it?
Yes, sir.
Yeah. Okay. Let's look at the disclosure. Yes.
Please, so with the phases, does it mean we would have to apportion the loans to each of the phase?
Yes, so as part of the build-up cost, you know the cost build-up for each of the phase. You do the cost for each phase before you put them together to even go and seek for a loan. Is that not it? Yeah, that is if you are taking the loan for all the phases together.
Okay.
Could your hand is up?
Yes, sir. So in this regard, will the loan be a specific loan or enterprise pool of fund?
So here we are talking of whether it is a specific loan or enterprise pool of funds. We are saying that cease capitalization once it is completed in parts. If it's enterprise pool of fund, the borrowing cost incurred when you are not using it for any project is expense. Is that not it? It's the same thing. Whether enterprise pool of fund or specific borrowing, we are saying that once it is completed, any interest cost, any borrowing cost should be expensed. You get it?
Yes, sir.
Amen.
Yes, sir. Please, what if the project is in phases, but then after completion of the first phase, you're supposed to wait for some months before you continue with the second phase?
Within that 1 month, can the first phase be used?
Yeah, sure.
And so borrowing cost you cease on the first phase.
So what about, do you have to suspend borrowing costs for the second phase or?
No, the second phase will continue because it is part of the consortium process. That after the first phase, you have to, maybe you stop because you need to do some technical work before the second phase can start. I don't think a project, they will just stop like that without any reason.
Okay.
There will surely be a reason. Yes.
Okay. All right. Thank you.
Welcome. Okay. Now we have to look at the borrowing cost eligible for capitalization. Borrowing cost eligible for capitalization. So I think before we do that, we can go and pick a question. And then let's do that and then pick. I wanted us to, let me check. I think I gave you a question where you are supposed to look at when to suspend and those things. Yes, so I think this question, the question 2, yes. So we can go and solve the question 2. Then we now come and look at the borrowing cost eligible for what? For capitalization. Okay. More one answer. The number will go to 190, then it dropped to 160. Okay, let's go. Question 2. This one, Take your time. It's about dates. The requirement say that from when you are required to tell us when Quad Limited should start capitalizing borrowing costs. B, should Quad Limited suspend capitalization from April 25th, 2011 to May 9th, 2011? Is yes or no? C, should Quad Limited suspend capitalization from May 23rd, 2011 to May 30th, 2011? All of them need to give you a reason. So then D, when should Quad cease capitalization of borrowing costs? So somebody should read the question melodiously. You want a person with a melodious voice. So technically, I want a lady.
Oh, okay.
And then as the person reads, we pause to see if we can answer any of the requirements. Did you get it? Okay. Okay, someone should read.
Adjoa My Love Limited.
Please. We are reading, I beg you. Madam, please, let's start.
Adjoa My Love
I should
Limited.
have corrected the name, The name is Court, and I changed it to Adjoa My Love. So let's maintain it as Adjoa My Love. Let's continue.
Adjoa My Love Limited is engaged in the manufacturing of automobiles. Currently, the company is manufacturing its power generating plant. The project was started on January 15, 2011 with company's own funds.
So
Subsequently,
pause for right now. As I'm saying, when the project was started on January 15th, 2011 with the company's own funds. Which means that on January 15th, 2011, can we say that borrowing costs were incurred? Because the funds were available, right? The funds were available and they started withdrawals and those things. And then number two, expenditures were being incurred, but they said work has started. And then three, necessary activities too was ongoing. Okay, let's continue.
Subsequently, Adjoa Limited borrowed a loan from Roberts Bank to finance their project on February 22nd, 2011.
So pause for us. So we are going to look at the commencement. We'll look at it from the existing borrowing and the specific borrowing, where we have two different borrowings, true or false?
True.
Do you agree with me that
True.
the commencement for the existing borrowing should start from January 15, 2011? Do you agree?
No.
You disagree?
Yes,
January
sir.
15, 2011, all the criteria was met. However, the only challenge you have is the withdrawals.
Yes.
For existing pool of funds, we start the capitalization when the amount is what? Is withdrawn. Did you get it? So if they don't give us any issue on withdrawal, the assumption is that because they said the project started on that date, perhaps withdrawals also started on that date. Did you get it?
Yes, sir.
Yeah. Okay. So that one, we are commencing on the 15th in 2011. That is pending other issue that we may see in the question. Let's concentrate on the specific borrowing. That's where we have the issues. Number one is that they took a loan from Robert Limited on 22nd February 2011. True or false? True. So one, on this date, they start incurring borrowing costs because the loan is available. So the first one condition is met. It's level 2. Is that not it?
Yes.
Okay. David, your hand is up. This one, you have a question.
Yes, sir.
Okay.
Please, you were saying something about January 15th, 2011.
I said that is for the enterprise pool of debt. The enterprise pool of debt.
Okay, I thought
The
you said.
existing borrowing.
Okay.
The existing borrowing.
Thank you.
There are two borrowings. So let's continue.
The first payment out of the loan was made on March 4, 2011.
So pause for us. The first payment was made out of the loan. The first payment out of the loan was made on March 4, 2011. Did you get it? That was when the first payment was made. Okay, let's continue.
Okay.
Come to the commencement again. So let's
Due to some law and order situation, the project remained closed from April 25th, 2011 to May 9th, 2011.
So let's go and solve the B part of the question. Should my lab suspend capitalization from April 5th to May 9th, 2011?
Yes.
Yes. Because the law and order situation is not part of the construction process. Is that not it?
Yeah.
Friends, is that
Yes,
not
Robert.
it? Okay.
Yes, Robert.
So the B part, we have answered it. Let's move to, let's continue.
Okay. The work was also stopped for a week from May 23rd, 2011 to May 30th, 2011, so that necessary plan and layouts can be finalized after testing of projects completed so far.
So this is, okay,
plan-
this one, yes or no? Should we capitalize? Should capitalization continue or should we suspend it?
Yes.
Suspended.
We should
It should
continue.
continue. Yes, because it's part of the construction process that at a point you pause to do some engineering testing and those kind of things to make sure you have used the right materials, the right iron, those kind of things. So technical administrative work is part of the construction process. So the C part, we say that yes. Like we said that we are saying that no, capitalization should not be suspended. It should rather continue because it's part of the construction process. Is that not it? Friends, we've answered the C part. Is that clear?
Yes, we have.
Okay. So the C part is on the technical administrative work and it's part of the construction process. But now let's continue.
The plant was completed on July 31st, 2011, except that some signboard could not be installed until August 10th, 2011.
So pause for us. Okay, you continue.
Loan was repaid on August 31st, 2011. Cord Limited started using the plant on September 1st, 2011.
When should we cease?
31st July 2011.
31st July 2011.
No.
You mounting a signboard does not add anything to the value of the asset. Is that not
substantial?
Yes.
Well, I tell now that the signboard, the asset is not ready for use. Did you get it?
Yes, sir.
So the cessation will be on July 31st, 2011. Okay. Now let's come back to the first question. When should we start capitalizing borrowing costs? For specific borrowing costs will start from the commencement date up to the cessation date. And the commencement date, all the three criteria has to be met. Before you took the loan, the work had already commenced, right?
Yes.
Before we took the loan on 22nd February 2011, the work had already commenced. So the third condition was already met because it was ongoing. Is that not it?
Yes.
And then we took the loan on what? On 22nd February 2011. That was when we started incurring borrowing costs. Is that not it?
Yes.
Okay. By that 22nd February 2011, because work had started, we had already started incurring expenditure on the project. Is that not it?
Yes, it is.
Yes. So commencement will start on 22nd February 2011. That is for the specific borrowing. But for the existing borrowing, it was there at the start of the project. And then we start from January 15th. That's assuming that the first withdrawal was made on January what? 15th. Did you get it? All these questions is just
No,
to
sir.
illustrate the principle.
Okay.
So please, can you take it again? So how do you answer this question?
Please, we have answered the question. Your question is not a good question. I can't answer it.
Oh,
We've
please.
answered the question. You're asking how do we answer the question again?
What I mean is, they were
You
not.
mean the first one?
Yes, but the question A.
I'm saying that there are two loans. One is existing borrowing. The existing borrowing, the borrowing cost capitalization should start on the 15th January 2011. That is, the assumption is that withdrawal was made on that date for expenditure. And then activities was also ongoing before they said you started the project. Did you get it? All the three conditions were met on 15 January on the existing borrowing. But when it comes to the specific borrowing, the expenditure incurred and then the necessary activity, that one they started on 15 January. But the borrowing cost incurred on the specific borrowing started on the 22nd of February. That is when all the three criteria was met on the specific borrowing. So that is when we commence capitalization. Raymond, your answer.
Yes, sir. So my
I want some clarification. With regards to the project was started on 15th January 2011 with company's own funds. Are you saying that the company's own funds is still first borrowing?
Yeah, so the company's own fund, it's what we call existing funds or enterprise pool of funds. So I'm saying that if you have to calculate the borrowing cost to capitalize, we'll calculate borrowing cost to capitalize on the company's own funds, which is the existing borrowing. Then we calculate the borrowing cost to capitalize on the specific borrowing as well. Did you get it? So the company's own funds, it should start from when the withdrawals were made up to the cessation date. So we are assuming that on that 15th January, when work commenced, they started making the withdrawals from that date. So the focus on the question is not on the existing, it's on the specific borrowing. The specific loan that they took, commencement of capitalization should start on 22nd February because so the time they took the loan, work had already commenced. They had started incurring some costs. And then just that the borrowing was available on 22nd February. So the moment they took the loan, they met all the three criteria. Honorable Osmanu Amuakwa.
Okay, sir. My question has to do with where the project is being funded through a company's own and a specific one. Can we still spend the money at the same time from the same pool of funds?
No. Enterprise pool of, we'll come to that. So you are jumping the gun. We are moving small. So now the next thing is that we are looking at borrowing costs eligible for capitalization. We are looking at how to capitalize borrowing costs on specific borrowing, how to capitalize borrowing costs on enterprise pool. Then after that, we come and pick a question on specific borrowing. They will come and pick a question on existing borrowing. They will come and look at where a project is financed from both specific and the existing. Once there is specific borrowing, you can't go and take money from the existing. It's only when the specific is exhausted, then you can take money from the existing.
Okay. Thank you.
Okay. Cool. More one answer.
Oh.
We are here.
Oh.
Okay, so let's go and look at the borrowing costs eligible for capitalization. Then we take a break and then come and solve questions. It's more or less like the explanation is taking all our time. Wow. I have 30 minutes more. Oh, which means we can't solve questions. Which means tomorrow I'll stretch you a little. Let me check the timetable. On the timetable tomorrow when I restart, is it 7 or 8?
7 a.m.
7.
8.
You don't let me check the timetable, no problem. Saturday, 5th. Tomorrow is 5th March, right? 5th March is 7 a.m. to 12 noon.
5th March or 15th March, boss?
15th March. Is tomorrow not 15th March?
It is.
Yes, so it's 7 to 12. So please, we want to exhaust everything. So I beg you, the 7 to 12, 5 hours, I strongly believe we can do all the 13 questions. But if it happens that we are left with some few questions, please let's sacrifice and then finish it, because I've arranged it in such a way that we need to meet the target for each of the days. Please do get it. I'm saying I'm pleading.
Yes,
If it
sir.
happens that we need to
Yes,
add
sir.
some 1 hour or 2 to finish it, I beg. Try and then let's make the sacrifice so that on Sunday we can start the earnings per se. I don't want us to eat into other standards so that we can finish.
Yes, sir.
All right. Okay, so at least today we've gotten the explanations. So let's look at borrowing costs eligible for capitalization. Then we'll look at the disclosure. So by now, I think you can go and rest for tomorrow. Borrowing costs eligible for capitalization. Those who didn't join the previous one, I believe you've won the 21 and you are fine. Those who didn't join the IPSAS 4 or the IAS 21, have you watched the video?
Please, where can we find the video?
Is that one?
Where can we find the video?
Oh, I've been sending the messages across all the pages where you can ascertain the Telegram link, the video link, and then the Zoom link. Are you on the WhatsApp page or you are on the Telegram page?
No, the WhatsApp page is full, so I couldn't join.
But I've been sending a Telegram link that you should join.
Okay, I'll check from there. Thanks.
Yeah, so you can WhatsApp me if you've not joined. I'll send you the link to the videos and the Telegram link so that you just join. All right, that's it, my dear. So we're going for eligible for capitalization. We have two sources of funds. We said that we have specific borrowing. We have specific borrowing. Talking about the before we need dinner. The work we'll be doing tomorrow, you cannot come and do it with tea. It's more than carrying concrete. Don't go and take cocoa, take banku, or gobe,
More than the work of that person.
or Almighty Wachi. I'm Wachi's Almighty.
One of those fastings.
Kokonte won't be bad, but you know, that one to vanish quickly.
We are in Lent. We are in Lent. We are in Lent.
In the Ramadan season.
What of the food for those fasting? What should they eat?
Okay, those fasting. Okay, those fasting, you are supposed to fast. Make sure you eat well and done before it's 6 o'clock. Because Ochende, maybe more papa. So we are looking at the capitalization rate to use and the borrowing cost to capitalize. For a specific borrowing, the capitalization rate, that's the rate that you must use in capitalizing, should be the effective interest rate. I said, should be the what? Effective interest rate. I've already explained that if there is no other cost, then the effective interest rate is equal to the nominal interest rate. Please do get it. Please do get it.
Yeah.
Okay. What about the borrowing cost to capitalize?
Yes, please.
The borrowing cost to capitalize is the borrowing cost incurred. And it's in year, very, very important, very important. Borrowing cost incurred from commencement. You know when to commence. So from commencement up to the cessation date. Less, I love it. I think I'm in love with this. Less any investment income from temporary investment of idle funds during, and now word is what? During the period of capitalization. You know that during the period of capitalization, there could be some idle funds. Is that not it? Like sometimes the money will be in the account in anticipation for payment. Usually in a formal arrangement, the payment are scheduled. You know when you are supposed to make payment to the contractor, they are scheduled. So that you know when money should be idle for you to invest. So less any investment income. Any investment income earned from any investment income earned from idle funds and from idle funds or temporary investments. And from temporary investments. But the underlying word is during the period of what? Capitalization. It's so important. If more one answer, so if the period that you earn that investment income, that period, if within that period you have suspended the project, borrowing cost incurred is expense. So the investment income also be taken to other income in the P&L, or it will be taken to income in the statement of financial performance. You cannot less it. Did you get it? You can't deduct from the borrowing cost to capitalize. We are talking of matching concepts. For a given period, if you are capitalizing borrowing cost for a given period, the investment income earned during that period should also be deducted to be used to reduce the borrowing cost to capitalize. If within a given period you are expensing the borrowing cost, then any investment income should also be taken to profit or loss or the revenue and expenditure account. Please, does it make sense?
Yes, sir.
Yes, sir.
Yo. So take note that this matching concept, you can always test it.
Sir.
Yes. Yes. Oh, somebody was calling.
I would say no, sir.
I don't understand no. What question is no?
Please repeat yourself.
You mean on what I said on investment income? So
Please.
like
Yes,
the question we just read. Let me go back to the question. You saw that we said that from May 9th, from April 25th to May 9th, borrowing cost capitalization should be suspended, right?
Okay,
right?
yes.
So during that period, any borrowing cost incurred will be taken to profit or loss. So any investment income earned during that period should also be taken to profit or loss.
Oh, okay.
But the rest of the
Yes.
period that we are capitalizing borrowing costs, any investment income earned during that period should be used to reduce the borrowing cost to capitalize. You do get it?
Yes, sir.
Yes, please.
Should I do you understand it now? Hey, your
Yeah.
number is for
Yes.
148.
Thank you.
You go so a bisa. Sana monso mobekwana. Okay, so let's look at the enterprise pool of debt. Two issues. So the capitalization rate to use is the WACC. We call it the weighted average cost of capital. You just calculate the interest on all borrowings at the end of the year. Then you express it as a percentage of the total borrowings. So when we come, the first thing I will explain is how to compute the WACC. And then we start with the existing borrowing before we go to the specific. So it's the WACC, the weighted average cost of capital. The WACC. Hey, more one say
Sir, we are.
Okay. Now let's see. The borrowing cost to capitalize. So the borrowing cost to capitalize will be the borrowing cost incurred. This one, there will not be any private funds for you to invest because the funds already has an existing use. Is that not it?
Yeah.
So there wouldn't be any investment of idle funds. So borrowing cost incurred from the withdrawal date up to the cessation of date. So as and when an amount is withdrawn, that's when we say that you started incurring borrowing costs. So we take it from the withdrawal date up to the cessation of date. So when we meet, remember I said we start with existing. So that we learn how to calculate the WACC and then we look at how to compute borrowing cost to capitalize on existing what? Existing borrowing. We'll pick series of questions and then when we are fine, we look at specific borrowing. Then when we are fine, we go and pick project finance from both specific and existing. There's a small trick there. We look at it. Then after that, every question we will solve is a past question or an ACC question. It's a examination question. The first two that we have picked, that one is just for you to understand the principle. Nobody will bring that question to exams. But the remaining 11 questions, they are technical. They are standard exam questions. We take our time to solve all of them. Like I said, if we are not doing borrowing costs, we are not doing borrowing costs. But so long as we are doing borrowing costs, we should exhaust everything. What we are doing, even in a normal class, you don't have time to solve plenty questions like this. That is why I'm surprised some students are not taking advantage. In a normal class, who would treat a standard and solve 18 questions with you? Nobody will do that. So tell them they should join. It's free. I don't know. Free things, people don't like it. That's okay. All right. So of my mates who are there, you can pray for us. Okay, we've not looked at the. Okay, let's look at the disclosure in a minute. Let's look at the disclosure, then we take pictures. For prayer. You are supposed to disclose the capitalization rate used. Capitalization rate used. And then you disclose the borrowing costs capitalized during the year. During the year. These are the two disclosure requirements. But you can add that any other information relevant any other relevant information the standard gives us to relevant information. Well, it's important you disclose the capitalization rate used. We want to know, is it WACC, is it effective interest? We need to know. And then the borrowing cost that you have capitalized during the year too, we need to know. All right. So let me go back and we take our questions. So can we start taking the pictures? Can we start taking the pictures? So please, you send a PDF on the page. You know, I've been taking the PDF and the questions. It's on the drive as well. You've seen it. You've seen that. Okay. Please, the one who have been sending the PDF, please do that for us. Please, can I move to the next page?
Yes, please.
Yeah. Okay. Page 2. Go in. Can I move to the next?
Yes, please.
Page 3. Can I move?
Yes, please.
Can I move?
Yes, please. Please, you can move.
I move. Okay. I keep saying that as lecturers who want to grow, it's only the lecturer who doesn't want to grow that does not take feedback or that does not accept constructive criticism. So if perhaps the approach I'm using to teach, you think that, Charlie, you have an idea on how I can improve on it, you can always WhatsApp it to me. In fact, you will be my best friend. I get in it. I prefer the negative than the accolades so that it can help us to grow. That will say if I teach you, maybe sometimes you can avoid this. We get those calls all the time, and I thank those people. Anybody who has done that is my friend forever. I said, no, in your teaching, I think you have to avoid doing this. Or I think when you add this, it will help. So if you have such issue, you can always WhatsApp me. And then at least you will help me to grow. Did you get it?
Can I give you mine right now?
I have a question.
Sir, can I do mine right now?
Can I do mine now?
WhatsApp him.
Okay, so let's take this picture.
WhatsApp him.
I'm saying last question.
Who and I'm saying
What's your phone number?
I should not be asking more one answer.
It is the sweetest part of the class. We want you to increase it.
Sir, I buy it now. Machine man, I try there no.
Hey.
So mommy, if you are there, kindly pray for us, so that we can end the recording before we discuss that one.
Sir, why I come you?
Hello, Sir Robert. Respectfully, please, where can we get the pictures? Which of the platforms, please?
So the same link that I've sent for you to get the videos. If you
Oh, okay,
open
sir.
that link, you will see that there is a video folder, notes folder, and then question folder. So the note contains these pictures, the PDF pictures. Then the question folder contains the question that we are using. Then the videos folder contains the videos. Friends, I believe that is what you have seen.
Yes.
I know some of you are on Telegram, but those on WhatsApp, they will get the PDF directly, but I will download and put it on the link for you so that you can always have us.
Thank you very much, sir.
Okay. Yeah, so Mami, are you there? So Mami Ellen. I think I saw him. Yeah, dropped. Okay, let's pray. Heavenly Father, we thank you so much for learning with us. We pray that the little we have learned today, you bless it for us so that day we can be able to reproduce and pass away that. In Jesus' name, I will pray to thank you. Amen. So please tell your
Amen.
friends, tomorrow is
Amen.
7 a.m.
Amen.
We'll not waste time to be sending links, plenty, the same link. So send to all your friends, let them join. It's free. Oh, Rade. There's some more.
Thank you.
It's free.
It's free.
Oh.
Thank you, sir. Thank you very much, sir.
Why is it that always they have to
God
charge you
bless you.
before you value something?
Thank